also have Alberto Guerra.
Okay, so Erik, a pleasure looking at you. We need another chair. Alberto, placer. Oh, look at these two gentlemen helping. No, this is. So, this is what that we're going to try to do is of course, we've been talking about digital and how we're moving to digital. And for me, and some of you know that I always been very, in a way, critical about some of the things that are happening in relationship with cash and digital, and how cash and the war on cash and all these things. And the more and more we see what is happening, and I want to discuss this with both of you. And to prepare for this panel, I'm going to let each one of you first introduce yourself a little bit, so most of you know Alberto and Erik, but it's good to know a summary of your career so that you understand where your point of view comes from. So let's do that first. I'm going to sit down there. I'm going to share yes, and so we're going to go into their backgrounds, and then we're going to talk about whether the industry is changing fast enough, and where are the challenges, and what should we look ahead? What are the trends, and hear their advice as veterans of this industry, and veterans you both are, So Erik, let's start with you.
Thank you, Hugo, and really appreciate being here at the CrossTech conference to speak with you all. I'll be quick because I have a lot to say about the topic. I've worked in the fintech industry. I've worked in the cross-border payment industry, some of the industries in addition to that, always in banking, always on a global scale there, started in the 90s, and I've got the gray hairs to prove that part. I've worked at cross-border payments. You've heard of World Remit, for example, there as we were growing out on the Latin America side. Transitioned over to a traditional company, there Intermex, and learned about the other side of that business. And what's interesting is we had a conversation earlier on today, Hugo, about now I'm at crypto.com, and is that different or is that the next stage? It changes on a daily basis. Of course, the regulatory environment is always different, but if you ask me, I think this is the next part of the evolution of cross-border payments that we're going to see. Speaking with BRZ, for example, other similar stable coins that we're going to be seeing, I really do believe that the future is going to be with crypto.
And I'm going to make a joke here because this is, I asked Erik if he thinks that he upgraded to crypto or he downgraded to crypto. It was a joke, but is his attire? He downgraded himself now because he's in crypto.com. He wears jeans and a T-shirt, So I was discussing whether I should wear a tie or not. And Priscilla said, "No, Hugo, you need a tie. You need." So I was, So we are now in conflict. So you are in between.
I'm in between.
Yeah, no tie because you want to be.
Yeah, I'm in the process of going onto the side. Yeah.
See, and this is
Still
what is
trying
going to
to get
happen
there.
with all of us. You can see it here. So first you give out the tie, all right? Yes. Then you can still wear that, but then you change in jeans, and then you use your sneakers. So we're in the process here of changing. You, Alberto, tell us a little bit about your side of the story.
Thank you, Hugo. And first of all, also thank you for the invitation. Thank you for the organization of this event here in Brazil. So it's a pleasure being here. And for those of you who don't know me, my name is Alberto Guerra. I'm the CEO of United Financial Services. I was born and raised in Mexico. I've been working in banking almost throughout all of my career at the Banorte Group, which is the second largest financial group and bank in Mexico. First in international banking, then corporate banking, M&A, and then back to international banking. In this second phase of my international banking career, I was part of the group that acquired a bank in the US and also a remittance company. That remittance company was Uniteller. And after the acquisition of Uniteller, I moved to the US 15 years ago, and I've been living in the US and heading Uniteller. We've been transitioning Uniteller. It was back then a small traditional remittance company, and we basically transformed Uniteller into becoming what it is now, a solutions provider for the industry, a payment aggregator with a digital platform, and looking to build an international paying network and doing partnerships with companies and institutions around the world. And also, as we're fully licensed in the US and Canada, we provide white-label solutions for institutions that are interested in having a digital capability in these countries as well.
So as you see, the interesting backgrounds of Eduardo and Erik is the process, the digital process. We always talk about digitalization when is the providing of digital services to the customers. But the process of becoming digital internally in the companies, it's quite a unique thing. I mean, yes, you see fintechs that come in with the technology that they develop. They're digital first. I mean, that's how. But companies that have gone through the changes, it's also a process of becoming digital. I'm not gonna. I just wanted to make that because you can see it. Digital in front of the market or digital on the back office. And those two things go simultaneously in a way. So I want to hear your points of view in the issues that you think are more relevant to the market now. And I'm going to start with Alberto because of his views, and then I go to Erik. So you begin. What I mean, you will discuss, financial inclusion, becoming digital. But where are we? Where are we heading? Are we responding to the needs of the market? How do you see competition coming on? What is your point of view on digitalization right now?
Yeah, when we talk about digitalization, you always have to look at both sides, both the origination and the paying side. And I think each country has a different story. Obviously, in the US, digitalization has made a lot of growth in the industry as well. Probably helped a lot because of the pandemic. We all saw how digital companies outgrew the market because of the pandemic. But also the US faces a lot of challenges in terms of financial inclusion for the immigrant population in certain corridors, particularly to Africa, to Latin America, certain countries in Latin America. So that's a big issue for digital companies to fully take over the market, and there's still large volumes coming from traditional cash remittance locations. So can companies in the US do more? Definitely, but I guess all of the companies right now have a digital strategy. Some of them at the beginning phases of that strategy, others with a more complete multi-channel strategy. So they all are trying to do something. Obviously, the size of the companies, the competition, the investment needed to have a successful digital channel. We're just talking in the last conference about the challenges regarding investment in cybersecurity and challenges on digitally onboarding customers. So there are many challenges that companies need to invest in order to do this efficiently. And then on the on the payout markets, you have many different stories depending on the market. Countries like Mexico, where digital wallets have not been successfly implemented
yes.
Because of regulation, because of consumers' reluctance to get out of the cash ecosystem that they're used to, because of tax evasion, because of inefficient ways to pay digitally or or upload money to the digital wallet. So there are a lot of challenges. Other countries in other corridors have been more successfully implementing and onboarding customers with better rules, better regulations. So I think at the end of the day, we're seeing a lot of positive steps in the different countries towards digitalization in the payout countries, but still a lot of challenges coming that still need to be solved for them to be successfully implemented.
Yeah, and challenges are both regulation, are the players in the market, the relationship to the banks and non-banks, and I will say an adoption by sometimes we want to push consumers to do things that they don't really want to do. Sometimes because the solution is not there, sometimes because they don't want to use it for some reason or another. So those challenges exist, and in cross-border payments, you know, you have challenges in origin and destination, but I think you summarize it.
Yeah, the wallet ecosystem needs to work in the country. The people that use the wallet need to have efficient ways to upload funds and make payments in all the locations that they have to or they need to. So, and that's, we cannot talk about digitalization of remittances in these recipient countries if the wallet ecosystem is not working.
Yes. So you have a different perspective.
I do, but first let me comment. It's very clear, Alberto, why you are CEO. You're eloquent and you're diplomatic in your discussions. I am much more abrasive on the other side, so you're going to hear my perspective on this. Has the digital companies, have they done enough? Have traditional companies done enough? In my opinion, absolutely not. And I was able to reflect on this, on the technology component, because on my way over here, I got stuck in the elevator. And when I was stuck in the elevator, it gave me time to reflect, to think, look at our dependence on technology, but with a passive system, without constant upgrades and all, I'm going to get stuck in elevators at crypto.com and all the other theoretical pieces. Now, first, let me give credit where credit is due. The digitalization of remittances and cross-border payments was a huge step forward. And it was not just, we're taking traditional customers who are going to an agent and we're giving them a website. It's not. The strategy that I see was the ownership of the client. When you go to an agent, that client is not the client of the remittance company. It's that agent's client. They're the ones that are able to choose and to select. And what do? They turn it into a commodity service to a certain extent. They're saying, who's going to give me the best FX? Who's giving me a promotion this month in order to reach a certain level of transactions that I want to select for? So they have the power to choose. The difference of the digital side is that digital company owns that client relationship. And here's the benefit, CRM. So you're going to be able to take that client, you're going to be able to say, hey, we saw that you sent $240 last month to Brazil. Did you know that the rate for BRL is much better now? Do you want to send a transaction? So you've got more engagement that you have to do. And part of the valuations of these digital companies, as we've seen, they have taken off significantly, and that's one of the discussions tomorrow there that I'm looking forward to, hearing about Remitly's story on that. What are we going to hear about why their valuation was so high? Probably too high, in my opinion. It's because of the ability of ownership of that client. And that piece is so important that I want to share with you guys, because once you have that client, you can start cross-selling other opportunities to them. And this is where the real money comes in, when you're able to be a digital company that you offer just the wallets that you had mentioned, for example, the other financial inclusion services that you can do, getting into lending and have a customer lifetime value. You're making revenue off of this customer, not off of just one transaction every once in a while, but on the overall. But here's where my critique comes in. Where did all that potential go? Where did all the solutions go? Where were all the other pieces? We're starting to see the valuations of these companies drop down more significantly, and there's a rationale for that. I don't think enough was done. We were talking before about the fintech companies and how they have digital platforms and all. I don't think they have leveraged them sufficiently, because you're not only supposed to do it for the customer acquisition side. That's one step. What about the partnerships? And we talked earlier before about the red tech. What about outsourcing to other customers to do AML pieces? Let companies focus on what they do well. Leverage partnerships with APIs, SDKs, other things that I don't know what they stand for, but it's a good technology mix to go with, to leverage partners in order to accelerate growth. And this, to me, I think is one of the biggest misses that digital companies have not done in the time in order to be like a shark. And you guys have probably heard me say this before. Companies, whether it's a traditional digital companies, are sharks. They have to constantly keep moving and eating. If they stop, they die. And that's the question that we're going to see here. Is it in 5 years when we have this discussion, in 10 years, is it going to be the same players that are going to be there, or is it going to be different players that are sharks that are going to be eating the other sharks?
Yes, and of course, everything changes with the perspective that you see it, or how long you see the history coming forth. So this industry has always relied on partnerships since the beginning. And what I see digital do is also that companies are more open to partner, and that's also part of the digitalization of the market. I mean, you're partnering with new players that you never thought that you would partner before. Some of those relationships are more difficult. When you partner a traditional company with a crypto company, then you have to look at the risks. You have to see, how your regulator will see it, how your bank will see that relationship. So there is complications in those partnerships, but those partnerships are also a way to get more digital solutions to the market. So and that is happening. I mean, I see it here. I mean, it's amazing the amount of companies that are here in the different views. I mean, and yes, this is a B2B conference. I mean, businesses, and when you see digital happening, yes, and I know that a lot needs to be done on leveraging all those possibilities with the client, and companies have to realize that, yes, and there's a lot to be done on that side. I agree 100% with you, but in partnership, in digital partnering, there's a lot to be done too. You see what I mean? Where I'm going?
More needs to be done.
Yes.
That's my point. I agree with you on the partnership side, but more needs to be done across all the different facets. This isn't just a traditional partnership. We signed up with one and we're set. It's a constant look of who's the best in the market and going through to address all the pain points that Alberto had referenced before.
And who is coming with a new solution. And it's not easy. Look, I am trying to do now, put all these definitions of this industry together. What is an aggregator? What is a facilitator? What is a payment processor? I mean, everybody's calling themselves everything. What is a white label? I mean, everybody can call themselves a white label. So we need to understand, and for regulators, it's not easy. I mean, for us, it's not easy as consultants or as companies to see where we all stand. We're making charts all the time to see, okay, what does this one do? And this is getting more complex. It's a great, I mean, I'm passionate about this market. So for me, it's a great thing what is happening. But I think you've seen it. I mean, you're partnering with companies every day that you didn't think, maybe a year ago that you were going to partner with. I mean, it's a constant challenge.
Yeah, I mean, because now it doesn't make sense. I mean, it's so competitive now in the remittance landscape, in the digital remittance landscape. It doesn't make sense for a fintech or any company to try to build everything all from scratch and build a network, build a compliance platform. So you need to partner and get the licensing in the US. You have to get licenses and be regulated in every state. So it just doesn't make sense if you have a fintech with a multiple variety of products and services that you waste your resources in building your own remittance capability and network. So partnerships should be the way to go. And to Erik's point, if you pretend to be efficient and have a profitable company, a valuable company, having remittances as an exclusive service of your app, of your product, of your company is not going to make it for you. So that's where partnerships and alliances that you can do with companies that provide services that can be attractive to your customer base, that's how, in my opinion, and I'm sure Erik shares this opinion, is that's the only way that companies can survive into the future, with offering remittances as efficient as possible, but as a part of a broader financial service atmosphere, ecosystem for the consumers, where you can then leverage the information, the data, the CRM, and through AI technologies, be sure that you offer exactly what the customer needs and the customer is looking for. That's the only way. I mean, and companies are already doing it, so thinking that you can survive without doing this is just naive, in my opinion.
It's interesting. Now, in terms of cash versus digital, which is something that we discussed because the remittance industry, the money transfer industry, let's say the P2P, the migrants send the money to their countries, that's still a large cash business. Now, of course, with successful stories like Pix in Brazil or M-Pesa in Kenya and others, which are changing the market in the way that less use of cash. Now, what is interesting is also that the processing or the management of cash is being digitalized. It's happening, you know, and that's interesting. I'm going next week to a conference. It's the Global Currency Forum, and it's the companies that print money, which are looking at digital and say, where is our future? Is our future will exist? And I am moderating a panel on crypto and cash. Okay, it's something that it has to be seen also as, will cash exist? Yes, it's going to stay. It's going to stay, but how is it going to be managed? Because there's a lot of expense in managing cash for governments and for banks. Banks don't want that expense anymore. But there are companies who are getting better in cash. But I don't think it's cash versus digital anymore. It's how to make the two of them work together. What do you think?
I see your point. And here's my thought process on this. The cash versus digital, to me, is just one small component of the overall relationship that a remittance company is going to have, right? Because that's the customer-facing point. How do they want the channel to come in? Sometimes a customer is going to want to do cash. They're going to go into an agency. They're comfortable with it. They want to buy a food from their local home country, for example. It makes sense from a social standpoint. Other times, they don't want to put on pants on a Tuesday afternoon, and they send it digitally. They have all the options that they can go through. But that's just one component. The other components are, what is the company going to do with that, from that transaction size? How are they going to send funds from let's say the United States to Brazil, for example? How are they going to facilitate that? How are we going to make that better? How are they going to differentiate themselves from the other remittance companies? Are they going to say, I can send it faster, I can give you a better foreign exchange? Or is there something else that you can do? Can you do a rewards program? Can you give an incentive? Or for me, I think another point of arrival, as we were talking about partnerships before, is maybe not new partnerships, but deepening existing partnerships. And for example, here in Brazil, we've got a lot of important payers. What can we do in order to address that financial inclusion that Alberto had mentioned before, and saying, why don't we cross-sell something to the users in the United States to say, hey, you can have a wallet here, you can transfer funds back and forth. Every time someone keeps the funds over here, you get some type of reward. What's the relevant reward here locally? Finding a way to constantly address customer needs, whether it's cash or digital on the sell side or on the beneficiary side, I think is the true vision of partnership.
What's your point of view?
No, I fully agree. There may be customers that, as Erik mentioned, they need to continue using cash. For them, it's more efficient. Again, tax evasion is a big thing. Also in the U.S., customers collecting cash and paying out in cash, afraid of the IRS or immigration if they open an account and have the regulators capable of looking at those records. So there are a lot of issues of why traditional cash remittances will continue to exist in the origination.
And traditional cash payments.
Yeah.
And I do think that, I mean, we probably will see, I mean, we're talking about digital here, but there's a whole side of cash management companies that want to be part of the payment cycle. And maybe they will become very, very, very interested in managing that very efficiently.
They would be the best buggy whip makers in the world. That's my vision. Yes, of course, you can still focus. Cash is going to be very important. We talked earlier in panels, for example, about regulation and how that's going to go through. Cash is more difficult to regulate. Cash is more expensive to manage. Cash is more complex to deal with on an overall basis. I do think that the digital component is going to be accelerated from a regulatory standpoint as well as from a customer friction standpoint. If we're talking about costs, and costs are constantly being compressed, we're trying to lower fees and all, we have to be less expensive when we do our transactions. Totally. And if there's a way to leverage that digital component to eliminate the cash piece, to accelerate the adoption of digital, not because it's just what the customer wanted, but it enhances the regulatory environment and it lowers the cost per transaction, that would be the direction we should go.
Yes, and we understand that everything that is happening in the market, I mean, still the revenue reduction per transaction will keep on happening. That's not going to change. I think it's more competition. It keeps happening because yes, the market keeps on growing. So there is more appetite to lower prices to the public, to increase and newcomers in the market that want to build the revenue share. Now, where do you see, now that you're looking from your background in payments, the crypto side in this digital process? Because I don't know if you see it in the front side with the customer, or the digital participation is more on the back side. How do you see it? Do you understand my question?
Yes and yes. So here's how I see this, and this is, of course, much more delicate and more theoretical that we're going for, right? But I do think that there's a significant potential for crypto to help out, especially as I'm talking about the optimization of digital and lowering costs. First, to your point, I think it'll be on the back end. It'll be servicing the unit tellers of the world, for example, and giving you guys the flexibility to say, all right, we can do immediate settlement between these certain markets. It's not going to be all markets at once. There are going to be certain markets that are going to have larger pools of crypto to get funds in and funds out. It's going to reduce the cost of foreign exchange, and it's going to accelerate the time for settlement. So I think that's going to be the first part.
And lower liquidity costs.
In lower liquidity costs, absolutely. What's interesting is, in this model, the customer is not going to be aware that there's a crypto transaction going on in between. The customer is saying, I'm paying cash, I'm using my debit card, I'm doing a bank transfer, and I'm going to settle in Brazilian reais for whatever the foreign exchange is at the time. That's phase one, right? As we get the Albertos of the world there to adopt, explore with all the risks that you had mentioned before as far as the banking and the regulatory environment, which it's moving. It's moving a lot slower than, of course, us in crypto would like, but it's moving. Phase two is when clients are saying, I can transfer funds from a stable coin over here or a Solana over there to my loved one from around the world, and it's going to go through the metaverse. I'm going to help buy a pair of sneakers that are digital, like Nike has, for example, for $200 across the board. This transaction has already happened. These types of transactions, to me, I think it's a little strange, but okay. In 5 years' time, these types of transactions are going to be normal. My daughter is going to be growing up. She's 6 now. She thinks she's 16, but she's 6. And she's going to grow up in a world where it's going to be so normal to say, I'm going to take whichever coin that I want and send it to my loved one in Timbuktu so they can do whatever the heck they want. And she's going to expect that funds to get there in seconds with minimal slippage there so that the foreign exchange fees and everything like that are negligible. That, of course, is a few years out, but that's why I call it a phase 2.
No, well said, and yeah, Erik is right. We do see opportunities in making our settlement as a company more efficient by using stable coins, crypto type of settlements. So definitely that's something that remittance companies will continue to explore. From the consumer side, just a couple of notes. Yeah, I think that there's an opportunity for consumers, as Erik said, to start seeing the benefits of using a stablecoin wallet to make transfers. I think that's, and there's been already a couple of efforts on that end. Using other type of cryptocurrencies, I think that it's going to be very challenging just in the US. I mean, if you hold crypto and you make a purchase or send money with crypto, you get taxed depending on the value of what Bitcoin was valued when you purchased the currency and what was the value of Bitcoin when you made the transfer. And if you had
Yes, an increase
an
in
increase
value,
in the
then
value,
need to pay
you
the
get
tax.
taxed on that. So that's just going to be a nightmare for consumers to adopt currency like Bitcoin to make money transfers. And then also the efficiency again of money in and money out of the crypto ecosystem in Latin America and in many countries. I just don't see the consumers with the appetite of receiving a crypto to make expenses rather than just holding them for long-term asset revaluation. So different purposes of why people are holding these cryptocurrencies.
But in a way, this is why we all exist as companies. We're trying, we're developing our own. For me, it's great that some of you that I just met today trying to explain to me, what they do, and my position is okay, explain to me again, And I've been in this industry for a long time, maybe too long, but it's really, I mean, we're living the best time in payments ever. And Brazil is an example of that. I've seen it in 10 years. And that's why I said it this morning, congratulations, because he is making it happen. And as country, as Brazil does something and Mexico does something, the whole Latin America kind of looks and sees and just tries to do it its own way or looking at this, but it's the advancement of, for me, as a region, and there's a lot to do, really. I mean, and maybe Africa can leapfrog some things like M-Pesa did, but because they don't have that, and things that I see in Europe now that are happening in Europe, not happening in the United States, and you always saw United States going first doing things. It's not happening anymore. I mean, our country is doing things much faster because technology is, so digital has so many ways, and we wanted to take this panel just to see that digital is many things, and we are all part of this transformation. So thank you, guys. Thank you so much.
Thank you.
It was very interesting.
My closing comment there is we are all sharks. Don't forget it. Let's keep swimming forward.
Yes. Thank you.
Thank you.
Muchas gracias.